reluctant entrepreneur, was definitely not planning to go this route. I was a firm believer in basic research and basic science, and so my background was a little more circuitous in this space. I've always been obsessed with the earth, and from a young time as a child, just loved being outdoors, and there were some early moments we can talk about later that really led me to believe I wanted to be studying this and understanding these systems more. I did an undergraduate in geology, and ended up doing some work in industry. I did some mineral exploration work for copper and cobalt that were becoming critical elements as part of our supply chain for renewable energies, but ultimately went back and did a PhD at Stanford University, where my discipline was in, since we're in a technical setting, I can say structural geology and isotope geochemist with a focus on the thermal, physical, and chemical evolution of the Earth's crust. A mouthful, which really means we try to understand how mountains form and how the natural resources and environment around that can form with it. So in some ways we could predict where oil and gas is, we could predict where minerals were, and I was feeling increasingly conflicted about those kind of commercial or practical applications of it, and it really led me increasingly towards geothermal energy as the subsurface energy resource, which is incredibly abundant and very hard to find and hard to understand, and has led to an industry that has been stagnant for decades with almost no growth in the United States for quite some time. And so we'll talk a little bit about how that led me to found a company with a co-founder called Zanskar Geothermal. And really what we specialize in is applying these next generation forms of AI to the problem of subsurface uncertainty quantification and targeting, so that we can go out and find resources at a speed and scale that just simply wasn't possible before. And the good news is it's working now. And so 4 years ago, we were just 2 people, no capital, no projects, and really, I'd say theoretical proofs of concept from some of the research that we had done with others. And now, 4 years later, we are 70 full-time employees. We've raised over $65 million in Topco equity. We have over 40 projects that we're developing across the Western United States, and one project that we've been able to apply our technology to add new megawatts to the grid that will be coming online in the next 2 weeks. And when that does that, we will be the 8th largest producer of geothermal electricity in the nation. And so it's been a very exciting road, and we're excited about what's ahead.
And I'm excited to get into all the details of how Zanskar was able to go from 2 people to a team of 70 in Salt Lake City, or just outside of Salt Lake City, just over those 4 short years. But maybe first, let's take a step back. What got you excited about, or what got you into geology and geoscience in the first place?
Yeah, there's 2 sides of this. One, my grandfather was actually a uranium and gold prospector in the 60s and 70s and 80s, and as a young child I got to go spend time with him in the Northern Sierras. They lived in Paradise when they were younger, and then Greenville, so 2 cities that have been obviously highly impacted here in California by recent fires. But I would go into the Feather River with him, and he'd teach me about Geiger counters, how you could find something, or about gold, and it gave me this just love of, oh, there are treasures out there. I wasn't thinking about kind of the mining impacts or the other parts of that, just, oh, it's out there. But another kind of maybe more impactful part of it too was I was growing up in Western Oregon, and in the 90s, we were in a part of Western Oregon out near Tillamook, or Astoria, if any of you have been out there. It's timber country. Most of the economy is driven by cutting down trees and selling them. And time came for the mountains behind my house to be cut down, and it was a particularly rainy winter. And we ended up having a once-in-a-100-year flood that came down, and to me, in my young mind, thinking, was there any connection between this clear cutting and the fact that our house was just flooded within months of that happening? And conventional wisdom at the time was, no, there's no connection there. That was just coincidence. Obviously, the science and soil science and other things have taught us a lot since then, but it just gave me this obsession with the things that we do as humans, even if they feel small and temporary, do have an impact on this giant planet and ecosystem. And it's had me thinking about it since. So that's really what led me into the geosciences.
And it's a big shift to go from, I'm working on a PhD thesis and research on quantifying subsurface data and turning that into usable insights. How did you go from, hey, this is something I'm working on in the lab, or by going out and actually trying to do some of this stuff experimentally, to maybe I should turn this into a company?
Yeah, I think part of it was kind of thinking about the impact that the work was having. I think many here are researchers and have worked on really interesting problems, and sometimes there can be this sort of end where NSF or some other agency has funded the research to prove what's possible, and as soon as it's possible and has been shown once, there's no longer an incentive to keep funding it. And it's sort of like, oh, now industry should take this and run with it. We'll fund the new fundamental science problem. And seeing some of those ideas get to that point and then almost stagnate and die was starting to trouble me a little bit, because we were seeing our own research do that. There were these incredible breakthroughs in how we think about subsurface characterization and exploration that were coming out in the labs. At the time I was at Stanford, and some really interesting new methods that we were just not seeing being picked up by industry anywhere, and particularly in geothermal, which really had nobody exploring or looking for new sites. There's really nobody on the other end to receive that. And so I think for us, we increasingly saw the urgency. We need this technology, we need firm baseload power as soon as possible, and our research being a key tool to that made me increasingly consider this possibility of entrepreneurship.
And on that point, what were some of the things that you were seeing either in the market, or what were you hearing from people that convinced you that we were at a real tipping point, specifically for geothermal?
Yeah, I mean, there was this little kind of mid-2010s where we started to feel like, okay, solar and wind have come down the cost curve. It's incredible, right? It's something we should be very proud of as a society, as a scientific community. And we started to feel like maybe we've solved all of energy, right? That plus batteries is going to get us there. But increasingly, certain grid systems that were adding such a high density of these intermittent renewables were starting to face stability challenges, sometimes rolling blackouts, sometimes cost increases. And it got some of the more advanced grid scale modeling, some efforts, say Princeton's net zero study, a number of years back, and others were starting to realize we still need something else. There has to be a firm or dispatchable form of power. It doesn't have to be all of it, 10, 20% maybe at most. But without that, costs were going to skyrocket as we get to the final part of getting to net zero. And this is where I think the recognition for geothermal or nuclear as our only options really came into sight. And so that market driver of we're going to need something, otherwise a baseload crunch is coming, and recognizing that the technologies in geothermal had all just hit these tipping points across drilling, across targeting, across even topside turbine technology, that were allowing it to be deployed at a scale that just wasn't possible. To us, those two converged to make it the right time.
And you teed up my next question perfectly, which is, there are a lot of things that were happening. The timing for, drilling technologies, all these things were getting better. They were getting more and more ready. What was the missing link? There are a lot of different approaches to geothermal out there, and Zanskar is specifically focusing at the moment on conventional hydrothermal resources. What did you identify as, hey, look, I've done this really cool stuff with my co-founder in the lab, and we're working on this really interesting research. We have a unique insight. What is that unique insight that enabled you to form your thesis for how to build Zanskar?
Yeah, so within geothermal, there are resources that exist naturally out in the Earth's crust, and there's other just hot zones that we can engineer into these. And as a whole, though, they're all underground and they're hard to see. And when you look at the history of geothermal development, it's one of the first energy sources that produced electricity over 100 years ago in Italy. And even here in Northern California, the geysers facility just north of here has been producing for over 50 years. So we've known how to do this for a long time. But when you look at all of those projects, they were either at a site that had obvious indications of the surface. Boiling, mud pots, geysers, fumaroles coming out. Like there's steam at the surface, just put a turbine on it, you're good to go. The other ones, which now are about half of the operating fields in the United States, were basically all found by accident. In New Mexico, it was a farmer drilling for water and at 100 feet hit steam. In central Nevada, more recently, a gold company looking for gold and hit steam. And these accidents kept accumulating, and we'd see it and say, oh, let's turn that into a geothermal power plant. And I think there was a little bit of an aha happening over the past 10 or 20 years as we said, this is happening so often, there must be a large number of these out there. Because when you look at all of the wells that have been drilled for any purpose, oil, water, mining, etc., in the Western US, in the geothermally prospective areas, we've probably tested around 5%. And so you quickly get the sense of, if we're still accidentally finding gigawatts of geothermal, there must be tens to maybe even 100 plus gigawatts out there. And this was coinciding at a time where my co-founder had been working on geothermal research project problems for a while, trying to better understand the structural controls of them. What are the indications when there's no hot spring, when there's no volcano? How could you tell that this resource is there? And so research coming out of the University of Nevada, Reno, over a number of years, funded by the Department of Energy, started to show that you could systematically find these. And they were doing it more lab scale, proof of concept, back testing. And it hit a tipping point at the final part of this DOE-funded project where they were able to go and drill the first one of these best predictions with real money in the ground, and they hit it. They hit, for the first time, a geothermal site that was found deliberately by systematically vectoring into it with data. And for us, it was a there's now a risk that this funding is going to be cut because it worked. And two, this is the time to scale up. We need to do this. And I'd love to believe that all of the technology was solved and figured out at that point. It's not. You always realize that there's so much more you still have to do. And so we've had to continue to make lots of improvement in research, but that was the tipping point.
And I think that there's something there that resonates with probably a lot of us in the room, which is it worked, so maybe the funding is going to get cut. Where, was that the moment where you said, okay, this is where it's time to actually start a company? And it's still a big leap of faith to do that. Walk us through what was your mindset like at the time when you were thinking about actually building something? What happened next?
Honestly, for a while it was more like, oh, this is going to be exciting. I want to join that industry. There must be a job I can go to. And there were no geothermal jobs anywhere. We talked to the geothermal developers and they're like, it's too risky. There's not much growth. We've got our people. We talked to the Department of Energy about this type of research. Will they keep funding it? And they were saying, well, I mean, it worked. So we kind of did our thing. And at the time, we ended up taking a class at Stanford called Stanford Climate Ventures, which is a course that really kind of pulls technical people together and says, go out and interview everyone in the field and figure out, is there actually an opportunity here? And this is what I mean more by the reluctant. We just went to audit the class. But one of the professors there, Dave Danielson from Breakthrough Energy Ventures, was like, you're not auditing, you're going to be one of the class projects. We're going to do geothermal as one of these. And so we went and interviewed as many as we could in the space, and the more we did that, the more the market demand was crystallizing, and the more we came to realize that nobody else was going to do this, and we could start something right then. So that was at least the we'll do it, but obviously long road from there to funding.
So post Stanford Climate Ventures, you're working on this as a class project, and you're still two people. Paint the picture of what comes next. Two people to, okay, we're starting to build this out into something. Post the class, what happens?
We got connected as part of these conversations to somebody who had founded a few companies before, knew a little bit about the venture world, so they're teaching us some of that structure. And they said something like, oh, this will be way easier and more funding than trying to get a postdoc. So this is easy, like money will come. And so I remember this like, oh, that resonates. And you often hear this, there's more money than there are good ideas out there. Great. And so I was feeling really confident. Money's just going to flow in. And it was definitely not the case. We started speaking to angel and seed investors in Silicon Valley and elsewhere, and 95% of them were like, you're going to build a software for an industry that doesn't exist yet. There's no customer here. Okay. And if we started to say, no, we'll build that industry, we'll be the developer, owner, operator too, and we'll use our own tech. Whoa, whoa, whoa. I don't see the software as a service play within this. If it's that physical, there's no way. So almost all of them, one meeting and done. We just can't fund something that physical and that in the real world. And the hard tech, climate tech wave had not quite come yet. This was still around 2018, 2019. And so really we were directed towards programs that are catalytic and have concessionary philanthropic funding. There weren't very many of them at the time, and we ended up applying to, at the recommendation of some others, the Activate Fellowship Program, at the time called Cyclotron Road, here at the Lawrence Berkeley National Lab. And it was really kind of a first-of-a-kind program that had had a little bit of success already, and its popularity is growing. And for us, this was game-changing, not just because it was a kind of a safe space to come and incubate an idea before you start the clock of venture dollars, but because they had worked with enough founders going through this type of program before to learn how to coach us through how do you learn to communicate to a non-technical audience? How do you learn to actually say what's exciting about it rather than what's factual about it? How do you do all of these things that as a PhD you've been trained not to do? And so for us, that was a kind of a key first unlock.
Yeah, I think there's a lesson here in that there are a lot of different investors out there. Every investors will glom onto or kind of resonate with different things. Some will say, oh, we really like capital light software models. And we were talking about this earlier today, which is that software only models aren't necessarily capital light. If you look at a lot of the big successful companies that are out there in the public markets today, they burned billions and billions of dollars in capital before they finally became profitable in the public markets, often 8, 9, 10 plus years into their journey. So I think there is a myth in hardware or hardware light models versus just pure software. That is something that we are working on as an industry, both in the deep tech VC industry as well as, of course, on the startup side, hoping to dispel with more case studies and examples like Zanskar. At the seed stage, that was you were getting kind of conflicting feedback about what investors wanted to see from you. How has that feedback changed at the seed stage, at Series A, and of course now post Series B?
Yeah, certainly at the seed stage, there was still uncertainty as to how the demand would come. Was it 20 years out that we were going to need baseload renewable, or was it now? The United States had not seen load growth in our electric system in over 20 to 30 years. And so there's also the idea we were always going to compete with turning off a coal plant or turning off a gas plant, which the economics of that are just harder to compete if you're building a brand new facility. We've entered a totally different economic world now, which is load growth is probably the standard for the coming decade or two. But then a lot of it was also, I think, the industry itself grew, and I'll ask you some questions in a minute about Obvious and how you were early in this space. But I do think investors started to realize there were going to be huge businesses built in worlds that were very physical. If we're changing the entire energy system, there's going to be a lot of new billion-dollar-plus companies built in that. And was it Larry Fink who said the next 1,000 unicorns will be climate tech companies? So I do think there was a changing recognition that software was not the only thing that could build a venture scale business with venture returns. And a little bit of what you had mentioned earlier, the capital intensity, I think people started to realize. You were one of the earliest to kind of say, well, this isn't more capital intensive. And so at the seed stage, it was still a little bit rocky. In fact, we had a kind of concessionary lead investor for our seed round called Prime Impact Fund out of Boston. And at the time, one of the very few investing into climate technologies. And you go through this funny investment committee process, right? You spend all this time convincing them that you're a great business, and they're like, okay, the last part of this process is we're going to put you in front of some normal venture capital firms that are not concessionary, and if they tell us they would not invest in you today, we can invest. And so you're kind of like, I don't know that I want that answer, but that's good. And so we went through it, and there were groups like Breakthrough Energy and Obvious and others in there, and they said, yeah, this is a great idea, but it's too early. We couldn't invest in this, the market risk, the technology risk. And so they ended up leading the round, brought in a few smaller checks, and some of those ended up leading our Series A when there was no concessionary result. So Union Square Ventures co-led our Series A. They're a traditional venture firm, not concessionary by any means, and known to have some of the best venture returns in the industry. And for them, I remember we sent a pitch deck through kind of a warm connection, and they said, we were still hiding the fact that we're probably going to build power plants one day, and kind of much more, look at this cool software and tool and AI architecture we've developed. And one of the partners there wrote back and said, if they're just going to build another software as a service platform, I'm not really interested. But put this one last sentence. But if they ever thought of like leasing those lands and building power plants and becoming the next dominant energy company, send them my way. And it was like, yes, that's exactly what we want to do. And they ended up leading the round, and Obvious has similar kind of shared alignment of you need to build great technology, but you also need to go and deploy and have real impact.
Yeah, I think that there's been this big shift over the last, call it, 20 or so, 25 years after the fall of the dot-com bubble, but really starting with that. Silicon Valley is called Silicon Valley because a lot of the original big founding inventions and companies came out of the silicon industry, right? A lot of the companies we know today, the Genentechs and others of the world, came about because of venture capital. And I think in the middle, there was a long stint where a lot of the best returns in the industry came from these quote-unquote capital-light, software-only models, and a lot of venture capitalists have been chasing that for a very long time. Over the last 5 to 7 years, at least from what I've seen, as the makeup of the industry has changed, as the type of people that now invest have changed, I think there are more, for example, PhDs, technical degrees now in venture than I've ever seen in my career. And that is only for the better, because now we're seeing more deep tech, more hard tech getting funded. And I think that's good, because now we will see kind of hopefully a return towards real hard assets and atoms, and not only bits plus atoms, but really, all of the above.
Yeah, I mean, I think even if you just look at the S&P 500 or others today, the highest market cap companies in the world are often led by technical founders now. The majority of the top 10 now are. And I think it's not that you needed their invention, but you do need a little bit of that technical mindset in the strategy room, in the leadership room, to make sure that you are making the right bets and that you're hiring the right people. Honestly, it's really hard to know how to evaluate hard tech or deep tech risk unless you've been in the weeds before and know the nuance of the scientific method. And so I think that's been a real unfair advantage as we've hired out more and more of our research and leadership team.
And coming to last year, you have a team that's proved out the technology model. You've proved out that you know how to really show early predictions, but you're not quite there in terms of getting real assets into the ground. You're going out to raise your Series B, and Obvious Ventures, we ended up leading the Series B in April of last year. And I'll tell a funny, quick anecdote there, which is that was my 5th day on the job that we first had a meeting with Carl. And at 11 a.m. or 10 a.m. on a Friday, we had a meeting, my 5th day on the job. By 10 p.m. that evening, I'd written a 10-page memo for our investment committee because we were that excited. We entered the process late. You know, there are a lot of other venture firms that were already in the process of talking to Zanskar and diligencing the company. But, you know, and again, we're a seed and Series A stage investor typically. But whenever you see something generational, when you see something that makes sense, you're willing to break some rules for it. And fast forward a couple of weeks later, we had visited Zanskar in Utah. We had met most of the team, and we were ready to commit and give a term sheet to the company. So we ended up leading the Series B, and you know, I know at the same time as we were doing a ton of diligence, you were learning a lot about us. Talk to me a little bit about what were you learning about us? What is the diligence that you were doing on us in reverse?
Yeah, I mean, when you're building a company like this, and especially taking a lead investment from anyone, you're in some ways getting married to them. You're going to be working with them for a long time. Everything takes longer than you think it's going to take, especially in hard tech and deep tech. And so it's really critical that you find somebody who shares your vision, who you can work with, even under very stressful conditions. Maybe you're running out of money, you're behind on the milestones. How are you going to tackle the next set of objectives? And so we were definitely doing diligence both through our interactions with you and with others that we knew in the ecosystem. Part of that is we were looking for people that were going to want to do some of their own work to learn how to match you, right? You're already running and you need them to kind of be willing to do that. And so some of what Obvious showed, they came late into the process. We were actually introduced a little bit late. So others were already a month into their diligence, and how quickly Obvious was able to come up to speed and say, we understand the challenges you're facing. We can actually see ahead based on the things that we've seen, some things that maybe you're not thinking about. And so Obvious very quickly got to where they were asking very thoughtful questions that there couldn't be answers to, but it was really a kind of dance for us to see how each other think about this, as opposed to a lot of the fundraising work that we were doing is often educating people about geothermal systems, about the power markets, about AI technology. And so having somebody who was willing to run and do their own work to then meet you was critical. And we also spent a lot of time talking to other founders that had worked with Obvious in the past. And that was a key part of understanding when things go wrong, when things go right, how are you going to face those situations?
Yeah, and I think that's a mark of a, you know, at this point, an experienced founder. You know, I know it's only been a few years, but one of the things that at least I'll say from my founding days, I was 21 years old, my co-founders and we got our first term sheet from an angel investor who wanted to lead our pre-seed round. And we said, oh my gosh, this is amazing. We're 21 years old. This is a check for $100,000 if we sign the term sheet. What is a term sheet? We go home, we spend the entire day just doing research on all the legal things and the clauses, and thankfully we had a lawyer friend who was willing to walk us through all the nuances of this. But you know, we were very lucky and had great investors at the very beginning who were able to kind of guide us and say, hey, at the next stage, here are the things that your next investors will be looking for. And you know, I think one of the things that your previous investors did a good job of is, it's not just about the diligence that your future investors will do on you, but it's also about reverse diligencing them to make sure that you are ready to enter into a 10-year-long relationship. One of my personal tests for whether or not I want to invest in a company is, do the founders pass the Friday night test? If I get a call on a Friday night, I'm in bed, it's 11 p.m. or midnight, do I take the phone call? And if the answer is no, then it's, you know, it's probably not a relationship I want to enter for the next 10 years. You know, that is a really, really useful kind of indicator of whether this is someone you can see yourself building a generational company alongside. And that's been something I think that's been really helpful for us to see, and also really exciting to see as Carl and you know the team at Zanskar and other portfolio companies we work with have been evolving.
Yeah, something I'd add to that is I know that if any of you have run or been familiar with this process, you're often courting many different investors, or investors are courting many different companies. And ultimately, this moment arrives where term sheets start landing. This is basically, okay, deal's about to happen, people need to put their final offers on the table, and you're making decisions very quickly at that point. And oftentimes you also feel conflicted. You think, my fiduciary obligation as a business leader is to get the best price possible. And we've seen that go wrong so many times for other companies. And in none of our rounds did we take the highest priced offer that was on the table. It was always more important to us to find the partners that we'd want to work with long term. And every time, I don't think it was them squeezing us because they knew that, but it was just, they were also thoughtful about the investments that they make. And we wanted to work with people that were thoughtful about what they do. And so in each of these times, we were very much prioritizing who the partner was that was going to be joining us.
And one of the, I think, additional things I'll kind of mention, when we think about what to invest in, I think we've danced around this a little bit, but there's this concept of founder market fit. And in an era where more and more deep scientific intelligence-focused companies are coming out of academia, are coming out of leading academic research, national research labs, that founder market fit is really important. So one great example I'd love to give, of course, we're talking to a great example here, but another portfolio company of ours, Pika, is based in Alameda, and they make electric autonomous aircraft for cargo, for crop dusting in the agriculture space, as well as more recently in defense. And as part of our diligence, we were talking to other customers and others that the CEO and the founders had worked with, and we talked to another founder as part of that diligence. She said, "Oh, I actually went to elementary school with Michael." We're like, "Oh, that's cool. What did you learn during elementary school about what Michael's like?" She was like, "Well, during recess, he would on the side of the playground, he used to build planes and fly them." That's founder market fit. When you've been building planes since you were 6 or 7 years old and flew your first human glider in middle school in your parents' backyard, that tells you something a little bit about what kind of person you want will keep on going when no one else will. That chip on your shoulder of, I can build the next best thing, I've wanted to do this my entire life. That is something, we don't always see exactly that. There are different profiles for what founder market fit looks like, but that's just to give you an example of the types of things that we see.
Yeah, this sort of gets me thinking about, I was obviously on the side of selling you on this, but I'm curious, when you are looking at these companies, it must be actually much harder than trying to invest in software companies. With software, you can use the product and you get it, you might be one of the end users, and almost always they have early metrics, right? You have annual recurring revenue or other kind of margin, customer acquisition costs. With these hard tech or deep tech companies, you almost never have that, right? In climate tech, most of these investments are made pre-revenue, and the tech might not even be working yet. And so how do you think about this kind of framework, aside from just founder market fit? What else are you looking for?
Revenue is overrated. Who needs to make money? At least in the early days. I think one of the big changes or differences between just investing in software-only companies versus hardware and software or kind of deep tech investments is that you're taking a different type of risk. Right? With a deep tech company, you might be taking early technical risk, but if they can prove that the technology works, that the business model works, you're typically selling into a market that's very well proven. So for example, in the energy markets, that's a commodity market. We know that if you produce energy, and if you can produce it cost effectively, someone will buy it from you. Similarly, if you are, for example, a new carbon to value pathway for e-fuels or for monoethylene glycol. There are so many commodities out there that are produced, and there's always a buyer for those types of products, especially if you can do it at cost parity. I do think that the era of the green premium, as we've been talking about for the last few years, it's a bit more challenged at the moment. So there's even more burden of proof on startups to be able to show that they have a technology that can be able to produce those same things at cost parity versus what the current kind of paradigm is. But that's one of the things we look for is this a really, really strong technical team? Is this a team that we believe can sell the vision of the future, both to investors that can recruit the right people to be able to help execute on that vision? And of course, are they able to retire enough technical risk to go raise the next round? Those are some of the things that we tend to look for at any one given point. But in the end, there are only so many, venture is a really strange game in the sense that there are only so many venture scale businesses that are built every 5 to 10 years. And that's not to say there aren't great companies that are built all the time, but many companies that are M&A outcomes, that are smaller outcomes, we are in the business of finding generational companies before they become those generational companies. And to do that, you need a stellar technical team, you need a stellar go-to-market team, or at least the ability to show that they can hire towards that, and learning velocity. I think that's kind of the other thing that we tend to look for. If you can show within 1 to 2 months, or over the few months that we know you, or over the first couple of years of knowing you, that you keep executing against milestones, you learn from the market, and you're able to kind of continue to grow. That's the type of framework that we like to look for.
And that's where I think these programs like Vapor Labs or Activate and others can be really critical in helping even the companies themselves start to set their own milestones and track themselves against it. I know at Activate they had us set up our quarterly board meeting cadence where we were setting those goals and being held accountable, still with no investors yet, but it created this sort of pattern of do what you say you're going to do. I'm curious, when you think about these programs become important to helping to bridge that divide from kind of national academic type funding to they're still not quite ready for venture, and you said not by the numbers you just said, there's no way all these companies are going to be generational companies. And I think that's okay. A lot of these programs allow you to think this might be a lifestyle business, this might turn into a nonprofit, this might go back into an academic lab, and some of these might become the next $100 billion company. aside from the team's ability and the velocity in which they're succeeding, is there anything you can say or speak to about kind of business model or market opportunities that should be key things that they're really evaluating during that first 1 or 2 years in a safer space like Baker Labs?
Yeah, I mean, I think that customer discovery is number one. It's really, really, really clear whenever we talk to founders who have really done their homework, because if you've done customer discovery, you've talked to 100 different customers. There are times that I've talked to founders who are like, yeah, we talked to 2 or 3 customers, we know this is a problem. You don't know it's a problem if you've talked to 2 or 3 customers. You know that there might be a problem, but you need to talk to hundreds. You need to know how many customers or potential customers is this a problem for? How much are they willing to pay for it? Really going in deep, being in the mind of the customer, being in the mind of the user or the person who has the problem. Is this a hair on fire problem that someone will say, oh, that's cool, or is it just a problem that someone says, oh, that's cool, or is it a hair on fire problem that someone will say, I'm willing to get there with you, both as a design partner, maybe if I'm, able to put in actual funding, both as a potential pilot customer, as a design partner. Those are the types of problems that you want to solve for, because the amount of friction that you're solving at the very beginning is so much better. So I think that that's one thing that's really crucial, is customer discovery, as much as you can do, as early as you can do it, and also competitor kind of mapping. There are times that I've been in pitches where I will say, oh, hey, you're working on so-and-so technology or product, do you know this direct competitor? And if the potential investor that you're pitching knows more about the competitive landscape than you do, that is a worrisome sign, because that means that you haven't thought about what other people are doing to try to solve the same problem that you're going after, and you haven't maybe thought about or you haven't optimized for the right solution for that same problem. So I think competitor mapping and having a really clear, informed thesis on what everyone else is doing and why you're doing things, solving the problem in the way that you are doing, and then of course, customer discovery. Those are the 2 best things that you can do early on when you're a part of a program like with Baker Labs or with Activate or what have you.
While kind of on this topic of how investors are thinking about this like first pulse of capital into the company, how do you think about the academic, maybe 2 sides of this? Sort of there's some body of IPs, most of which is probably published, there might be patents in the university, some of it might even be academic co-founders and others. What are the risks that this can introduce into the equation?
Yeah, I think IP is a really complicated topic. Core IP is a great way to generate a unique insight about a market or technology. It is not the thing that will help you raise tons of money or help you build a successful company. It starts off the idea, and it's enough to I think about it as offensive IP. It gives you a right to go after a space. It gives you the right to go after a problem. But by the time all said and done, that foundational IP, the patent or the core technology that a company was first built on, is maybe 0.01% or 0.0001% of why that company became successful. I mean, Tesla is a good example of this. They have a ton of foundational IP on battery chemistry, battery products, and a few years ago they open sourced all their IP. It was no longer the reason for their success. And in the earliest days, it's important to give you a right to win and understand who to bring on, and to convince investors that you have the ability to kind of do this thing in a unique way that no one else can do. But that's all it is. I think there's this myth or this commonly held belief that you can defend IP as a startup. It's really not true, right? If you have great patents, you will spend more trying to defend yourself from a big company, for example, that's doing the same thing as you, than you will have in the bank. They can outweigh you. Big companies and large corporations, they have unlimited resources to litigate that same IP. So I think when I think about successful outcomes in the startup world, typically it's not because they sued others into letting them do their thing that no one else can do. It was typically because they out-innovated the competition. They always stayed at the cutting edge, and this goes back to the founder market fit and kind of framework we were talking about. That IP, that first patent, that first technology, that first really cutting edge paper that comes out convinces me that this founding team knows how to operate at the cutting edge. It shows me that they have a higher than normal likelihood of being able to stay at the cutting edge. But the companies that continue to succeed are the ones that are the most innovative. They're the ones that say, hey, I published this cutting edge paper, I published this cutting edge patent on this new electrochemical method for separating acid and base. great. Now do it again 50 times in a row, do it again for the next 10 or 15 years, and now you have what it takes to be a generational company.
Yeah, I think you said 0.1 or 0.001%. In our case, I honestly don't know if any of our initial foundational IP is still in use in the company today. Right? It's that quick that you just find yourself rethinking the problem, looking at it from another angle. And it was the exercise of having created that first one that taught you the method, but it's that method applied over and over and over again that's going to become valuable. And so the idea of like, ideas are a dime a dozen, but actually hundreds of good ideas in a row, it is more the team that matters in that setting, and that team is the one that's going to be in the trenches for years building it.
So maybe actually on that, can I ask, when the first piece of IP or first piece of technology that was developed is no longer a big part of what the company does, but every single day you're generating new insights, you're generating new technologies or models or products. What has changed about the way you did it before when you were in academia versus the way you do it now at Zanskar?
This is going to sound a little bit like bias now from where I am now, but it's easier to get capital and we don't have to publish the results. So you're mostly in the experiment and iterate phase, right? Which is actually really exciting and rewarding. And I'd say in most scientific disciplines, most of the most innovative stuff is happening in academic labs, it's happening in national labs, it's happening with this kind of funding in this kind of slow burn environment. But when an industry starts to see a real commercial opportunity, and that capital is now orders of magnitude higher, I actually think at those moments it switches over where the private sector is what's really leading innovation. This happened with self-driving autonomous cars. This is happening with AI right now. In our space, it happened in fracking and oil and gas, where for decades it was an academic, and then boom, the industry's leading, and it will come back. And right now we feel that in geothermal. There are things that we know about hydrothermal systems, about geothermal science, that is not published anywhere. And I just feel like I wish we had time to stop and publish this, because a lot of people would really find this interesting. But we're really just in this pace of we have a mission to deploy clean energy on the grid, and we just have to run towards that as fast as possible. So you definitely get in a state of I'm just trying to solve the problem and apply it. And now we are getting to a scale where we can start to, we are publishing more of our work, but I'd say that's the main shift.
And these unique insights that no one else has about the geothermal industry, that enables you to hopefully be at the forefront of unlocking the geothermal future. What does an unlocked geothermal future look like?
And there's enough heat underground to power all of our energy, electricity, and heat needs for hundreds of thousands to millions of years. So the heat is down there, and it just gets hotter the deeper you go. And it's always been a matter of can we tap into it and access it. The tools that we've been developing have shown that we can now repeatedly find systems. The first discoveries of new sites were incredible, and you get to a point now where it's almost weekly that we'll hear from our field crews who are out there. They operate every day of the year, drilling new test holes. And it's just so exciting every time. It honestly does not get old. And every time one of those comes in, it's kind of the initial temperature measurement that shows this thing is off the charts, and you realize that thing could be a power plant. And that one power plant might actually avoid some open pit mine for the batteries that we were going to build otherwise, that now we don't need because it's a firm base load resource. And so it's really exciting to us to think that there may be enough of this potential resource out there, discoverable now with current existing methods, that we can meet these energy needs. And so we really believe this accelerates the path to full decarbonization.
And specifically for geothermal, obviously it's displacing other forms of energy, or at the very least in this case, we have enough load growth that maybe there's no displacement really happening. But what are the adjacencies? What type of new technologies? Are there new sensors? Are there new data sets? What are you most excited about that is helping to accelerate the deployment of geothermal?
So we're drawing kind of from many interdisciplinary sources, and so what's huge to us is Earth monitoring data sets. So everything from satellite, remote sensing, and ground-based sensors. We use all of the data types from the Earth's gravitational field, the magnetic field, the magnetotellurics, hyperspectral imagery, and all of these are telling you a little bit about what's happening down there, and then when we plug them into these models, we can make better predictions. So we're always excited about new data methods for observing. And on the other side, the new architectures for how we can deal with sparse data problems and three-dimensional subsurface problems. We've been really building off a type of AI called Bayesian evidential learning that was developed at Stanford over the past decade that allows you to embed physics and simulations into the training of these models. And it's been really a game changer for how we think about subsurface uncertainty. We're seeing the same technology move through oil and gas and mining, but we're obviously most excited in geothermal. And so even just better compute is allowing us to run these models at a larger scale. We've only gotten to a certain parameter count and size. We don't have the capital that OpenAI has. But when we start to see it actually surprise us with the answers, I think you get into something that I've heard Obvious talk about before, is this idea is maybe what comes after agentic AI is actually generative science, where the models start to surprise us with what they're seeing. If you look at even some of the video generators like Sora, is it was clear that it was starting to build these internal models of how 3D architecture moves, because you could ask it to fly over and it would preserve that without any physical understanding. And so we'll get to a point where you ask it, what is the speed of gravity? And it'll say, 9.8 meters per second squared, just because I've seen enough things. And for us, we're hopeful that there's this sort of like edge case where it starts to generate insights or ideas that would have never been obvious to us simply at the scale at which these models are forming. And so we're really racing towards how quickly can we scale up the size of these architectures.
Yeah, I think that we're talking a little bit about the physics and a lot of the science that's happening within Zanskar today, and a lot of this is also happening in the public domain. It's happening at other companies. It's happening at large LLM companies as well. But there's a lot of talent out there. There's a lot of talent in this room, and there's a lot of talent that will go on to start companies. A lot of people will found companies and go raise capital to build build their own companies. But there are also a lot of folks that will go out to work at the next Zanskar or the next startup. What do you think we need to do more as an ecosystem to help encourage or grow talent pipelines into especially hard science and deep tech companies?
I think in general, we just need more students in these programs, and so we do need to be continuing to fund and invest at an early age in STEM across diverse backgrounds. And I think within here, it's also just a recognition that there will never be enough academic jobs for all of these people, that we should be okay with and not see it as a failure of our program if they don't get a PhD or if they don't become a tenure track faculty member. And I know some of our incentive structures are designed to minimize anything else, but the reality is they need to go there, and real science is happening at these companies. Like what our team is doing is as robust as any geologic science department in the world. And we're proud of it and excited about it, and the team members feel that when they join, and I think we should be excited about encouraging them on those paths and giving them opportunities to test various parts of that market.
So what I'm hearing is that Zanskar is recruiting from the meditation groups that are happening about the lack of tenure track positions in academia. Or if not, maybe it should be.
We have hired a surprising number of postdocs who just feel this, incredible change in their quality of life when they realize, I can still do exciting science and not feel like I'm failing all the time.
Yeah. One of the great things about geothermal specifically is that it is, or energy in general, right? These commodity markets we've talked about a little bit in the past, they're unstoppable. There will be continued population growth, though that population will continue to consume products that are built on the backs of commodity products or using energy, for example. So geothermal and nuclear are some of the subsectors that are seeing a lot of tailwinds, even under this administration. What are some of the things that you're seeing, and what are sectors that you feel like are getting, what's unstoppable in this market?
I mean, unstoppable as a geologist, I think in geologic time, so there's a lot of things that are really unstoppable on that time scale. But, even on a century time scale or decade time scale, the energy transition is going to happen, right? No one administration or political view is going to change that. It is cheaper, better, faster energy that is more convenient to the modern way of life. And we're going to need as much energy as we can get, and I don't think we're going to slow down on either of those. So I do think solar and wind, which is still the dominant form of new additions, is going to continue, even though it will have some temporary setbacks due to policy. And right now, geothermal is in somewhat of a shielded space. It's a uniquely bipartisan topic, and maybe it's because it's carbon-free and small footprint and low environmental impact. Maybe it's because it's resilient American abundance, right, of energy dominance. So however you talk about it, it's something that I think we were fortunate to feel a lot of support from both sides of the aisle. And I think even here in California, we're also realizing that we have to build things, we have to develop things. And so whether you're left or right of the aisle, I think getting around the table and saying we want to make things better, and that's going to require building and rethinking these systems, I think those are inevitable tailwinds.
I think policy plays an inevitable role, but at least at Obvious, we think about these cycles as exactly that, cycles. Those cycles, there are political cycles, and then there are innovation cycles. Innovation cycles outlast political cycles. We invested into a company early on in our fund cycle in 2014, I believe it was, a company called Diamond Foundry. Diamond Foundry uses really, really cool plasma reactors to make lab-grown diamonds.